Today, I want to talk about PayPal versus Visa. We will go over some of the differences in their business models, but more importantly, I want to break down their numbers and go over the one key factor that is holding PayPal back compared to Visa. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Let's start off by taking a look at overall stock performance. PayPal in the last year is down almost 20%, and if you go to the last 5 years, PayPal stock is down 40%. Back in 2018 and 2019, this stock was trading at $100, and now it is trading under $60 per share. And in comparison, Visa over the course of the last year has gone up almost 30%, and over the last 5 years, this stock has ran up almost 90%. And these differences in stock performance are mainly driven by the differences in their business models. The two businesses are vastly different when it comes to age and what they focus on. Visa has a lot of experience and a proven business model, as the company was started in the 1950s, where PayPal is a company that was born in the 90s and still has a little bit of focus on growing their overall customer count and thus growing their top and bottom line. Both companies are in the global payments industry, and analysts right now are projecting that industry to grow by 8.2% from 2022 through 2027. Overall, Visa dominates the global payment industry, whether it's in-person transactions or online transactions. However, PayPal has a leading position in e-commerce. Visa owns and operates VisaNet, which processes over $13 trillion worth of payments annually. And these payments come from consumers, businesses, and agencies using either Visa branded credit cards or Visa developer APIs. And the way Visa actually earns their revenue is by authorizing and settling payments, as well as converting currencies for international transactions. They do not issue or manage their credit cards. This helps them avoid default risk from consumers not actually paying back these loans. In a similar manner, PayPal earns their revenue from transaction-based fees from people moving money across their network. However, PayPal's network is a lot more private than Visa's network. VisaNet actually links consumers, businesses, card issuers, and banks all together, where PayPal only links transactions between PayPal account holders. This closed network that PayPal has really forces them to focus on growing two main metrics. The first being the number of PayPal accounts that are active, and the second being their total payment volume. And PayPal also takes on a little bit more risk than Visa, as they have a buy now, pay later platform called Pay in 4. This allows customers to buy retail items at stores and pay in small installments over time. And this is a risk for PayPal, because if consumers do not pay back their loans, then obviously PayPal is stuck holding the bag. PayPal also offers credit accounts as well as fixed rate loans for businesses. And again, this is a risk that PayPal is taking on, because we could see businesses, especially in hard economic times, refuse to pay back those loans. And again, PayPal would be stuck selling off that debt for pennies on the dollar. PayPal also has a little bit more focus on acquisitions to help grow their business. They have bought companies like Venmo in 2012, and then Paydi in 2021, and Honey in 2020. Let's go ahead and jump into some of the numbers, and we're going to start with top line revenue numbers. For Visa, they're putting up around $8.6 billion per quarter in revenue, and this has grown around 9% year over year from Q1 of 2023 to Q1 of 2024. And PayPal's net revenue is about the same as Visa's. They brought in around $8 billion in the fourth quarter of 2023, and they're seeing a growth rate that is the same as Visa's, sitting at 9% year over year growth. And here we can see Visa's top line numbers shown graphically. Back in 2018, they were bringing in around $21.2 billion of trailing 12-month revenue. Fast forward till today, we can see that they're bringing in around $33.3 billion of revenue. For PayPal, they have actually seen more top line growth than Visa over the same time period. At the end of 2018, they were bringing in around $15.4 billion of trailing 12-month revenue. Fast forward to today, we can see that that number has grown all the way to $29.7 billion. And part of the reason that Visa has grown slower on their top line than PayPal has to do with the fact that we saw a giant shutdown in 2020. Obviously, as businesses shut down, less people are going out and using their Visa credit cards, and this led to a year-over-year fall of top-line revenue by around 17% for Visa. What's most impressive for me for PayPal's top line is the fact that they have maintained this growth. Over 2020, their growth rates were sitting around 20%. And oftentimes, a lot of these businesses that saw massive amounts of growth over the pandemic saw an immediate slowdown in 2021 and 2022. However, PayPal has done a very good job of continuing to grow their revenue, even though it's only in the high single digits. So where does the difference in PayPal and Visa come from? Because clearly their revenues and their top line numbers look very similar. However, when you look below the surface at their net incomes, Visa is a clear winner. Visa put up a GAAP net income for the first quarter of 2024 of $4.9 billion, where PayPal is putting up a net income of around $1.4 billion on almost the same revenue. And here we can see Visa's net income over the last 5 years. Back in 2018, they were bringing in around $10.75 billion of trailing 12-month net income. And that number has currently grown all the way up to $17.9 billion. And they have also done a very good job of steadily growing their net income. From the bottom in 2021, we can see that their net income has grown around 15 to 20% year over year. And PayPal has also done a good job of growing their net income. We can see at the end of 2018, they were sitting around $2.05 billion of trailing 12-month net income, and that has grown all the way up to $4.2 billion of trailing net income in 2023. However, there is a lot less consistency with PayPal's number. They spiked all the way up to $5.2 billion at the start of 2021, and then continued to drop all the way back down to $2.05 billion in 2022. So there is a lot less consistency with these numbers, and that can be concerning for investors. And the biggest difference between these two business models is how they control their expenses. For Visa, they have a total operating expense of around $2.68 billion, with the majority of that coming from personnel costs sitting around $1.5 billion. And for PayPal, they're putting up a quarterly total operating expense of around $6.3 billion. The majority of this is coming from transaction expenses, which is just under $4 billion. And I really like these graphics. You could find them on Instagram. This is not my account, but I wanted to give credit to this guy, Carbon Finance, because he does a really good job of breaking down visually what these expenses actually look like. So keep in mind, these numbers are from Q3 of 2023, so they're not the most recent quarter, but they still give you a very good representation of PayPal's business. The majority of the revenue coming from transactions, and we can see the biggest problem with PayPal is their expenses. They have a large amount of transaction expenses, and this leads to them only having an operating margin of around 14%. And we can compare those numbers to Visa. This is Visa's Q1 of 2024. They have a few different revenue sources, services, data processing, and international transactions, and of that, they have a margin of almost 70% for their operating profit. After taxes, this comes down to around a 56% margin, coming in at $4.9 billion of profit, with their largest expense being personnel, sitting at $1.5 billion. If I had to guess, probably about half of those transaction expenses are coming from personnel. And the reason for that is, again, Visa's personnel costs are around $1.5 billion, and they have a total of 28,800 employees. Well, PayPal is sitting at 27,200 employees, so likely their personnel expenses are about the same. So looking at the fact that Visa and PayPal have about the same number of employees, again, if we assume that the costs of personnel are around the same, that would mean that 1.5 of this $3.6 billion is made up from personnel costs. So there's about $2.6 billion that's unaccounted for, and there's nothing in PayPal's earnings that really explains where this $2.1 billion is going. So I'd love a little bit more transparency from them in the future on their earnings reports. And one place that it could be going to for PayPal is client incentives. Visa actually breaks out their client incentives before their net revenue. If you add this back into their net revenue, that actually decreases their profit margin by quite a bit. Instead of being just under 60%, it actually drops down to just over 40% profit margins. And don't get me wrong, 40% is still a massive number and way better than what we're seeing from PayPal. However, it is a lot more achievable for PayPal to get up to a 40%, maybe 30% profit margin than trying to beat Visa's 60% profit margin. And that's one thing that investors need to keep in mind, is how some of these companies are actually managing their finances and presenting them to investors. investors. One of the key differences between Visa and PayPal is the valuation that they command from the market. Visa, because of the consistency of their business and how well established they are, they command a little bit higher forward P ratio, currently sitting at a 28.5. PayPal is almost the complete opposite, as they have had inconsistencies in their business that have led to some skepticism from investors, and because of this, their forward P ratio is currently sitting at an 11.56. So keep in mind, I do own both of these companies. I like Visa and I like PayPal. Visa is a lot more consistent long-term kind of company. When I look at it, I don't see anyone stepping into their market and disrupting them in a major way, but it is a lot more difficult to build out a position in Visa because it's one of those stocks that just consistently goes up and never really has any substantial dips. PayPal, on the other hand, is in a major dip right now, and the valuation, in my opinion, is a little bit silly. I think with the amount of growth that PayPal has seen and will continue to see, I think the stock price will soon follow in suit. But keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day.